Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's panned out to be another strong day of trade. We have seen across the board rally coming in on most of the sectors contributing to the gains today. So we've carried on from the momentum of yesterday. This is the sixth day of gains that we are sitting on the markets today. 24,200 is what we saw in the morning trade. Slightly lower than that. We are 40 points higher even now at this point. The sectors that are rallying in trade today are Realty, which is up by 2.5% odd now. FMCG consumer durables are coming back in a strong fashion to nearly 2% higher for the FMCG index, 1.5% for consumer durables. Mid and small caps are outperforming the benchmark indices at this point in time as well. 0.8% of a rally, 0.9% of a move is what we can spot on those spaces as well. Apart from this, you can see banks, financial services continuing to rally from yesterday as well. Barring IT and infrastructure, rest all of the sectors are actually up and about in trade. ITC, HUL are the top movers on the Nifty amongst the FMCG plays. You have M&M, Geo Financial Services and HDFC Bank also contributing to the gains today. What's not doing well? IndusInd Bank giving up some of the last few days of a gain. Power Grid, Hero Moto, Infosys, Bharti Airtel and Wipro remain to be still under pressure. So some of the IT pack stocks that are still lagging behind. Even the PSU stocks in fact have slipped into the red on the index level. But power related stocks continue to hold up. NHPC, you have PFC, REC, these are the ones that are buzzing in trade. On the FNO space, Hindustan Copper, IFL Finance, Berger Paints, Dixon Technologies seem to be the stocks that are still buzzing on trade as well. Let's welcome our guest on board to discuss more about the markets and the way forward from here. Mr. Abhishek Basumalik joins in. He's the co-founder and fund manager of Sri Rama Managers PMS. Warm welcome to you, Abhishek, and thank you so much for taking the time out. We have these 6 days of a move that we've seen on the higher end, 24,200 with us on the Nifty. Nifty Bank at record high levels. Would you say that the worst is behind in the markets? Are we on course to probably recover to erstwhile highs?
I sincerely hope so. I think that probably uh, the bottom was made when in the gloom and doom of all this tariff issues, and we probably now trying to sort of consolidate and go up. We've seen very strong rally in the last 5 6 days. Uh, in a very short term, I think that we typically see one-way rallies sustain for 6 7 days, and then we get some kind of a pullback. So uh, I think for very short-term traders, that is something that you might want to watch out for, and for investors also you might want to watch out for a pullback as an opportunity to buy or add on to the stocks that you have.
Okay, fair point. I have to begin by understanding your thought on gold as well. That's been the biggest talking point today. 1 lakh mark finally in, and we had been talking about how gold could be approaching this level. Most gold analysts believe that this has come in much faster than their own estimates as well of 1 lakh mark coming in. At this point in time, would you prefer gold as an investor at all-time high levels, or would you tilt towards equities which are still much lower than their all-time highs, sir?
So I am always an equity person. Incidentally, today morning in my house, my wife was saying that, what are you doing with equities? You should invest in gold. Typically, these kinds of times are when it sort of tops out any asset class. I am not suggesting that gold is going to top out immediately. I think there are structural changes happening in the global economy. I think all of us are aware. Incessantly, we are hearing things about the US and things like that. So there is going to be some kind of movement away from maybe the US dollar, and global central banks have been buying gold, uh, for the last nearly a year. And increasingly, we are hearing of US retail beginning to buy gold. India, China obviously continues to be very large consumers of gold. So uh, there is this, uh, there is this notion or belief that people have that gold is a safe haven, and especially in turbulent times, it does have that purpose. Yeah, I mean, it does serve that purpose. So I don't think, it uh, it's very difficult to say in a commodity what will happen because there's no cash flow associated with it. So it's just pure, speculation and pure demand and supply which drives it. But I think right now, uh, you know, I would be hesitant to buy gold at this point in time as an investment. Let me put it this way. But people who have put in money in gold, I mean, I'm assuming that they are not putting it as a speculation. That buying gold for a fairly long time.
Fair point. You were right, and your wife was absolutely right when she said the same, because Uday Kotak also mentioned this morning in his tweet saying that the Indian housewives have actually beaten all fund managers, and they have turned out to be the smartest fund managers in the world with their investments in gold and the rally that we have seen unfold as well. So can't blame them, and we only have to
But that,
accept
but
our
that's not
defeat.
going to be for long. Equity is always going to outperform any other asset class simply because you're investing in businesses, and over time, businesses will outperform everything else. It's the simple, nature of things. So short periods, gold, real estate, whatever else, other asset classes might do well, but over 5, 10, 15, 20-year periods, equities will always outperform.
Equity will always outperform when you talk about 10, 15, 20 years perspective. So absolute long term, you have to look at equities as an asset class, versus gold. At this point, it'll be, you have to be a
So
little
let me ask you a
hesitant
very
and
simple
cautious.
question. Do you
Yes.
know of any billionaire, anybody in the Forbes list, anywhere in the world, who's not a businessman, right? I mean, you'll find maybe one or two who are artists, who may be, great sportsmen. But other than that, it is always going to be people who run businesses because that is where wealth is created.
Absolutely, that's a good point to take and note at this point as well. So one has to really look at businesses, and businesses also create wealth, generational wealth, and grow over time. And that's how you create money, by investing in such businesses. We'll take that point from you, Abhishek. The other aspect that I wanted to discuss in the equities is now where exactly should one really invest? What are the pockets of high growth that you're identifying in this fresh recovery that's taking place? First up, do you see that us retesting that 26,277 in that two and a half hundred points odd or so? Where do you see outperformance?
Uh, See, I mean, it is for sure that we will test the highs.
Yeah,
Whether we do it in the next 3 months, 6 months, 1 year, I don't know. It's also for sure that we will test 30,000 on the Nifty. Again, timeline is unsure. I mean, it could happen in 2 years, 3 years. It could happen this year. I don't know. I mean, nobody
correct,
knows that. The
correct.
point is that we are in an upward trajectory. I, started investing when Nifty was less than 1,000. Today it is 23, 24,000. So, at some time we will cross it. Now, the point of where we should be investing, or where, are the pockets is, one is the earning season are on. So, we need to continuously monitor businesses which are delivering growth, pockets where there is value, where and growth, right? So that's the areas that we continue to look at. I think structurally, India facing businesses look much better. So a lot of the infrastructure, engineering, manufacturing uh, spaces look more interesting. Uh, Healthcare, financials. I think financials have been doing extremely well. They are the ones which are leading this rally. Uh, so again, with the inflation numbers that have come in, uh, we can expect maybe another 0.25, maybe 0.5% rate cut over the period of, I mean, 225 basis point rate cuts the remainder of the year. So,
Yeah.
uh, financials look interesting. So overall, if financials do well, then real estate and real estate housing companies can do well. So, so the point here is once you have an economy which is kicking, right? There is a lot of downstream effects that happen from one sector to the other. So if finances, banking interest rates go down, real estate picks up. Real estate picks up. You have real estate ancillaries, cement, steel, ceramics, sanitary ware, all of those things picking up, plywood picking up. So I'm just trying to explain that one thing leads to another, and now we are slowly seeing, expecting good monsoons. So again, if there is a rural recovery, that would again aid to the pickup in demand from maybe FMCG, maybe consumer durables. So overall, I think we could be, I mean, my guess is next 2 months we will still be in that sort of doldrums, one tweet here, one tweet there, market goes up and down. But by hopefully May and June and maybe, this next 1.5, 2 months, I think globally also the amount of uncertainty is going to start going down, right? We'll start seeing free trade agreements getting signed or discussed upon. So India, Vietnam, some of these countries which are probably going to be initially off the block in terms of free trade agreements with the US. So all of those things will sort of start coming in, and there's going to be more or less some kind of stasis in terms of policy changes, right? So ultimately, what makes a difference is the rate of change. uh, why the last few months have been so hectic is the rate of change has been extremely high. One tweeter, or five tweets a day is going to move markets, and that pace is going to go down. So my expectation is June, July onwards. I think we should start seeing significant up moves, or stabilization and up moves in the market. And the other thing is we're already starting to see some FIIs of money flowing back. So that is again something we need to keep track of. So if FII money starts flowing back, then we could actually see a more sustained rally uh, starting off sooner.
Now, Mr. Basumalik, also wanted to get a sense. You did say banks, financials, you're looking at. I want to also understand from the LCR, Philip, also that they have just got recently. We can clearly see the central bank has more favorable stance towards banks and financials now vis-a-vis earlier at this point in time. Will it only benefit the large cap private sector banks? Do you think there will be a trickle down impact even on, say, the PSU banks per se?
So I don't see there's a difference between large PSUs versus large private banks. I
Okay.
think the large size, the SBIs, the PNBs, the Bank of Baroda of the world are very, very well placed in this next phase. So I don't sort of disregard, or I don't see them in a negative light. Let me put it this way.
Okay, fair point. The other space that I want to discuss is IT with you. We have been talking about IT space for a long time, and now we are amidst these earnings. We've seen TCS Infi come out with the numbers, Wipro too. HCL Tech will come out today as well. So far, what have you made of the earnings, and what's your approach on the IT pack particularly?
So I think IT, as expected, has not come out with good numbers. I don't expect them to deliver good numbers in the near future. I think there is going to be a significant amount of pressure uh, for most of these IT services companies, especially because US economy is not doing well. That is the bulk of the business for most of these companies. Once Europe picks up, maybe some of these specific players who are strong on the Europe side might start doing well. But expect a fair amount of pressure. I think also uh, the open point here with the IT services is how AI is going to impact them. There is a lot of productivity gains to be made in AI. So, uh, and the nature of the client and the nature of business in IT services is that the clients today are extremely aware of what is happening, what is it that they can get out of these IT vendors. So they will, squeeze these players to the last penny. So it's not going to be easy. I think I would expect a derating of sorts. The re-rating that they got during the pandemic, during COVID, because everybody thought that you'd be spending a lot of money on IT systems because people were all working from home and things like that.
Yeah.
I think that part is gone. I think I would expect. a derating, a P derating of the IT services company. So we should be ready for that. Either a price contraction or a longish period of consolidation in the price.
Hmm, fair point. So that's as far as the IT pack is concerned. Let's also discuss some of the other pockets. Metals is another one that I wanted to discuss. You know, we've been waiting for these safeguard duties. Now, finally, they have come in a 12% safeguard duty on certain steel imports. Do you think it's now time to probably adopt that strategy on buy on rumor and sell on news on metals? Or do you think there is some kind of a move that we can expect in the near medium term?
See, metals is very tricky because most of these, especially the metals that we tend to talk about, steel, aluminum, copper, etc., etc. They're all driven by global demand and supply and global pricing. And I don't know how there are different pulls and pushes, right? One is that if US and China continue to fight, both their economies are going to suffer. And if both of them are going to suffer, the global demand of metals is going to go down for sure. Now, in that kind of a scenario, what happens to the price? It probably goes down. And then China is by far the largest producer of most of these metals.
Hmm.
So do they start dumping at a whatever price that they can get, and how much more trade barriers you can put up, and then what happens to the overall demand? Very difficult circumstance or set of scenario to figure out, to be honest. So I'm not very clear as to how this is going to play out in the next 6 to 9 months.
Hmm.
So in a nutshell, I would typically want to stay away from these.
Okay, we want to stay away from metals. What else apart from metals is what you will continue to stay away from, sir?
I think metals, IT, like we already discussed, these are two very clear areas. I think to an extent, large FMCG, although some
Okay.
of them are doing well today, I think large
Yes.
FMCG, the great halo days of them, theirs is over. I think now people with incremental savings, they go in for more, their demand basket has changed. So people, instead of buying a better soap, is probably going and buying something else, maybe a mobile phone or a mobile recharge or something like that. So that's something, the pattern has changed. And uh, the the people that they were selling to, toothpaste and whatnot, shampoo, soaps, etc., that segment is more or less saturated. I mean, you will not uh, buy two toothpaste instead of one, or you will not uh, you not buy more quantity or more valuable ones just because you've got a pay rise, right? I mean, or
Yeah.
your tax is less. So there is a natural ceiling to what you can consume for FMCG, and I think mostly that has been achieved in India. Some penetration might still be there, but that is going to be very negligible, 3-4%, maybe 5% a year. Uh, so
Mm-hmm.
so large FMCG, and the other thing in FMCG which is very interesting, especially the more expensive or the higher end FMCG, is that there is a lot of B2C players that have come up, because of these online marketplaces in the last 5 to 6 years, and they are giving actually very tough competition to the established brands. So competition is increasing. Your growth is sort of not assured. So why would I want to get into something like that?
Okay, got that. So that's the view that's coming in. Let's look at some of the other pockets too. How about the PSU baskets, especially when we talk about power, energy, oil and gas, that space, because of what's happening with crude oil at this point, domestic demand in terms of power yet again in the summer months. How are you going to be looking at that aspect?
See, power is a structural demand, story that we have. The problem with the entire power pack or the power, stocks is most of them have, even after correction, are fairly expensive, fairly, well valued. So right now, I think we are getting into a time frame where you should be looking at both growth and reasonable valuations for stocks to do well. Because the moment I think you are betting on uh, stocks where valuations are extremely rich, you are opening yourself up to one missed number and the stock corrects violently. So you better off looking at businesses which are reasonably valued and which has a more assured growth over the next year, 2 years, 3 years. And the opportunity is that because of this correction that we've seen over the last 6 months, there are opportunities that are available in a lot of spaces, especially in mid caps, in small caps, because they've fallen a lot. So
Okay.
you can get an opportunity to buy good secular, uh, quality secular growth businesses at reasonable valuations instead of just sort of chasing the fad.
Could you give us a few names? What kind of names would you look at from the mid and small cap, sir?
So instead of looking at names, just look at, say defense is one area
Okay.
where I think if you see globally, everybody, especially the European countries, I was just reading, I think there are 22 countries in Europe that have come out with statements saying that they will increase their defense spending to around 1.5 to 2% of GDP. Now that is huge, and most of these countries are very, very small countries, uh, and lot of them uh, are definitely going to look for partnerships, collaborations, for maybe not their their top end defense products, but definitely maybe one level below, maybe some of the basic stuff. And that therein lies an opportunity for a large set of players within India, whether PSU or private sector, to
Okay.
actually supply to Europe, to Africa. And I think that is also beginning. If you see the export numbers for defense, defense products, that's going up significantly. So that is one space which definitely one should look at.
Hmm. How about EMS plays, sir? The erstwhile favorites, Dixon, Keynes for that matter. Do you think after the recent consolidation, yet again there is an opportunity to look at it, or
I
still
would
they are
think
very
so.
pricey?
No,
Yeah.
I mean, they are pricey, but here the opportunity size is tremendously large. And the other thing is, when we are looking at, say, players like, Dixon, Keynes, and Amber, and all of these players, I mean, all of them, right? We are thinking that, they are expensive and they are of this size, they've become so big. Now, if you just compare them with players in China, right, you will see that these guys can actually scale up 100 times from here and still not be the biggest player in the world in the a particular segment,
Okay.
right? So the opportunity size is huge, uh, and if any or all of these players can just keep their head down and continue to execute, they have a very long runway of strong growth ahead of them.
Okay, long runway of growth for the EMS plays there, and they have this opportunity to probably grow multifold from here as well if they continue to execute well. Let's discuss the real estate pack. That's the top moving sector here today, sir. We've been seeing, like you also pointed out, rate cuts now happening, focus coming back on the rate sensitive spaces. Real estate so far has been volatile over the last couple of months. What's the sense here, sir? Many stocks within the real estate pack, especially the mid cap ones, they are rallying in trade. Purvankara, Sobha, Godrej, these kind of names are coming back. Even DLF for that matter, that's also coming back. But is there still room for on the upside, sir?
I would think so. See, if you think just like any other Indian, there are two things which are going to happen immediately. One is the rates are getting lower, and second is people are getting, especially salaried employees, are getting some amount of tax benefits that are going to come through, right? One of the easiest or one of the big ticket items that people can do, if they suddenly get some amount of money coming in, which they had not sort of thought of before, is actually to buy a house or buy a flat or whatever.
Yeah.
So right, so that is something that it can, we have to see in the next 3 months how it plans out. But I would be, sort of very positive on the real estate sector, especially the, mid segment. I mean, luxury segment has been doing well throughout, so nothing new in that. But the mid segment, the slightly lower end segment also can actually start picking up.
So that's as far as the real estate back pocket is concerned. On the earnings impact, we've discussed IT, but on the overall Q4 earnings, sir, where are you penciling in outperformance to continue?
I would think that in some of the pockets, I think defense is going to do well. I
Okay.
think like EMS numbers, like we discussed, they should come in well. Pharma, most of the pharma numbers should be good. What else?
Also wanted to get a sense, so those are the pockets that you expect earnings-wise to continue to do well. Just wanted to ask you on some of the other aspects as well. When we talk about, say for instance, you talked about pharma, you talked about, of course, banks, financials, you talked about defense plays that may be doing well from here on. But particularly when I want to understand from you on, say the summer themes, consumer durables, for instance. How is your understanding of that? Is that also going to be doing well in the current quarter or so?
Yeah, I mean, short term, obviously, things like ACs, refrigerators, etc.,
Yeah.
tend to do well.
Hmm.
I mean, the kind of summers that we are already starting to see,
Hmm.
uh, I don't see any change to that. I think ACs again has become sort of a necessity for even for most households, right? I was reading a report where one of the company management was saying that people are now in some pockets buying ACs before they are buying refrigerators. So
Hmm.
that is the situation today, and I don't see that changing. I mean, the way the climate is across India, I don't see that changing.
Okay. One more pocket that I wanted to discuss is the capital markets related story, broking space, wealth management space. We've seen the news flow with 361 WAM today and UBS Wealth. What exactly are you foreseeing here, sir?
See, broking is a very cyclical business. So markets go down, broking business goes down. Markets go up, broking business goes up. Very difficult to sort of do that, but structurally it has been going up. My sense is we've seen some kind of sort of optimization or maximization of the number of people who've come into the markets. Now, from now on, it will be more incremental. People who are just joining the workforce, they're coming in. Most of the people who had to get into the market are already there. So all these, mutual fund SIP numbers in terms of new investors, new demat accounts being opened, those are now, in my opinion, going to sort of peter out. Wealth management, on the other hand, I think is a very, very strong structural business opportunity for the next 10 years or even more. Because what is happening is you are now getting a fairly large cohort of people who are earning significantly, but they don't either have the knowledge, time, or skill to manage their own wealth. So they're all moving to professional wealth management. So that is one area I think which is sort of, it has started and it is going to continue over the next, it's going to get stronger over the next decade.
Okay. Fair point, Mr. Basumalik. We'll end our conversation on that note. Thank you so much for navigating through many aspects of what to expect going forward from here and how to strategize our investment portfolios, tilt them towards those winning areas at this point in time with a slow and gradual recovery on course. We'll get you back soon to discuss more on the markets. Many thanks until then for being with us and hope you have a great time till then. 24,162. Viewers on the Nifty. We have a 36 point of a surge. We have cooled off from the day's highest point, but we've rather maintained our positive stance despite the missing cheer across the globe overnight and in the morning Asian markets as well. We managed to still afloat higher. We did not manage to shut shop above 24,200 that we saw this morning, but we are still better off. Most of the sectors end in the green, led by Realty, consumer durables, FMCG, mid and small caps, financials, pharma, autos, and even metals. But oil and gas, IT and infra, three sectors end into the red, despite the fact that India VIX also slipped up by about 1.5% at 15.2. ITC HUL continued to do well today. Top movers, M&M, HDFC Bank and Geo Financial Services, another top movers as far as the Nifty is concerned. But more stocks actually slipped on the Nifty into the red. You can see IndusInd Bank, Power Grid, Hero Moto, Infosys, Wipro, Bharti Airtel, 1.5% lower. These were the top laggards on the Nifty today. When we look at the F&O space, you have Hindustan Copper, IIFL Finance, Dixon Technologies, Max Healthcare, 5% higher for all of these stocks in the F&O band, particularly today. What did not do well? Again, like I pointed out, IndusInd Bank was lower, Chola Mandalam was lower, Cyient, NCC, some of the laggards on that front. Let's look at the top gainers in the Nifty 500 basket. Many stocks that moved up today. Kohinoor Foods, a 20% circuit on this one. Inox Wind Energy, about a 19% higher. You also have names like Tilak Nagar Industries, 13.5% higher. Banco Products, Electronics Mart India, that's another one that moved up today. Then names like Som Distilleries, a lot of these liquor companies probably in focus today. Let's also pull up United Spirits and United Breweries. So Tilak Nagar, Som Distilleries, you also have United Spirits up and about in trade. Liquor related stocks along with FMCG names, they were also higher. Purvankara was also up and about in trade. These were some of the stocks that really outperformed in the markets, 10 to 20% kind of surge on all of them. What didn't do well? In the broadest index, GNA Axles, Acme Trading, FinTrade, then names like Cholamandalam Investment declined, Sangvi Movers declined in trade, Premier Limited, Landmark Property, Akshopti Fiber declined in trade, Gensol Engineering continued its downward slide, Shanti Overseas India, Texmo Pipes, these were the pockets that didn't do well in trade. But as we shut shop, we cooled off quite a bit. You can actually see about just a 15 point of an uptick in trade, but we managed the 6th day of a gain in trade today. Remember, cooled off pretty sharply just in the last 1 minute or so. Profits being booked there in anticipation of, we do not know what will happen overnight in the US markets probably, and 6 days of gain. Remember that consecutively for 6 days we've been up. There could be some cool off now, but 24,167 on the show as the closing level on the Nifty. We'll leave you at that, but do stay tuned as Beyond the Market Hours also coverage continues on Business Today Television from the world of business and economics.